Hello chat, what's good guys? How's the week going? Before I get started, I want to believe you watched the last video in the channel. Let me quickly show that. I want to believe everyone watched the video. Previous video we talked about analysis. This is the video right here. If you come to playlist for easy access, if you come to playlist, you come to weekly chart analysis. Hello traders. So on weekly chart analysis, this is the video you're gonna say weekly market analysis. So everything I talked about here, this is why it is important for you to stay updated. Everything I talked about here played out. I mean, this video is still active. You can see today's date. I made it this week. I made it 3 days ago. Still this week, everything is still playing out. So if you haven't watched this video, you need to go watch it now. You need to go watch it now, because if you don't watch it, you won't understand, or you most likely won't understand everything they might talk about here. All right, so let's get started. Today we're gonna talk looking much into market structure, what is happening to um gold, look at the market structure, and also how to spot out market structure. All right, so let's get started. For me, one only thing you need is you need the 4 hour time frame. You need 4 hour, you need 1 hour, and 30 minutes. So higher time frame. Okay, let's do it this way. Higher time frame, high, you need the 4 hour, and you need the 1 hour. Sometimes, yeah, you need the daily time frame, but most times the daily time frame do not really align. So if if you really do not know how to read the chart and what the structure is saying, many times you might get confused, because the daily time frame doesn't really show significant movement, or to a bit of market structure to know, okay, this is what we are looking out for. Sometimes the daily time frame doesn't really give us that completely. All right, so uh I don't really look at, so because I know what I'm looking out for already, there's not there's no need to go to the 1 day time frame, but I mean, you need it as well. So when it comes to higher time frame, these are the things I look out for. These are the time frame I work with. Higher time frame. I can't spell today. So these are the things I look out for in the higher time frame. I look at 4 hour and 1 day. Then when I'm looking out for the lower time frame, I look at for something like this. So I'm gonna spell this lower. On the lower time frame, I work with 30 minutes, 30 minutes, and 15 minutes. So this is basically all you need. This is basically all you need when you come to your chart. This is basically all you need. And when you're able to spot out the market structure, what is basically market structure? Market structure is has to do with current trend of the market. What is the market doing? So for example, we have let me clear this. So if you have something like this, you come to your chart and you see market doing something like this, higher high. The market begin from here, high, from a low and a high. This will be a higher high. Why? Because uh this high is higher than this high, and it will do a higher low. Why? Because this low is higher than this low, and a higher high. So what does this tell you? This tells you that, okay, hold on a bit, let me make this a little bit thicker. um Hold up. All right, so Market structure, this is what you find out the market structure on a bullish trend when the market is trending upward. One thing you know is market structure creates trends. I need to type that out. Market structure, market structure creates trends. I can't spell today. Trends do not create market structure. All right. So market structure creates trends. Trends do not create market structure. So let's say you are on a 4 hour time frame and you are seeing this a high, a low, a high, a higher low, and a high. So if you're looking forward to buy, what do you do? So you simply gonna wait for this market to do what? To retrace back this poop to make a correction. Now this correction is a pullback because the market wants to grab some more liquidity, it want to grab more momentum to come back for another high. All right. So if you're looking forward to trade on a in this market structure, you're gonna wait for this market to pull back just like this. You wait for this correction. So once the market correct, then you look for entry and you buy to the upside. All right. So these are levels where market will come back to. These are levels where the market will come back to. So you're gonna wait for market at these levels. Now, if you are looking at this on a 4 hour time frame, same way this is happening on the 4 hour time frame. This vice versa. If you are looking forward to sell, if you're on if the market structure is bearish, you should be looking out for a sell. Same way, market will be creating a low. You see this? Uh, what is this? A high. Uh, so something like this. Oh no, sorry. Then create something like this. Well, so in a bearish market, we look at the lower lows and the lower highs. Now this is a low, a lower high, a lower low, a lower high, a lower low, a lower high. So if you're looking forward to sell, you're gonna wait for the market to do that correction for you. You have to wait for the market to do that correction, grab liquidity, and you sell. So that's basically what you're gonna look at for. So these are areas where the market is likely to come into. These are the areas, market is likely to come into. So you're going to position yourself for this entry. So if you come to your chart and price already moved, let's say you come to your chart and you meet the market here, you cannot buy from the high because you want to buy low. So you can't buy from this high because if you buy from this high, you are just setting yourself up for a trap to be taken out before the actual move starts. So what you're going to wait for, you're going to wait for this correction. You have to wait for the correction. Why do you have to wait for correction? It's basically because you want to buy low. Not just because you want to buy low, you want to have the best entry. So if you were getting into this market, you waited for this correction, the correction happened, and you get into this market just at this place. You get into the market here, you target the upward, you know, then your stop loss just below here. That's what you're going to look out for. The same way in a sell trade, if the trend is bearish, you wait for the correction. Once you get the correction, at the break, that's where you're going to enter. So your stop loss is going to be above the previous higher low, and you're going to target the previous lower low, or you extend a little bit. Why? Because when the market is correcting, after the correction, the new high, the new low is going to be lower than the previous low. All right. So that's one thing you have to look out for all the time, and that's just about market structure. That's one thing you need to know about market structure. So if the market structure is bullish, you have to always look at, is there a correction? Where is the correction? So now everything we did here, we say this is for hour. We say this is for hour. So this is happening on a 4 hour time frame. So let me write everything. Oops, sorry. So everything we have here is 4 hour time frame. Is happening in the 4 hour. Now, if you scale down to, because you're not obviously going to take your trade on the 4 hour, right? So you scale down to 1 hour or the 30 minute. Now, before I dive deeper, whatever you see on the 4 hour time frame must always align with the 1 hour time frame. And whatever you see with in 1 hour time frame must always align with the 30 minute. Your higher time frame must always align with your lower time frame. So if 4 hour tells me the structure is bullish, 1 hour must tell me the same thing. 30 minutes must tell me the same thing. All right. So if 4 hour is telling me the structure is bullish and 1 hour is telling me the structure is bearish, then there's a problem. You have to stay out of that trade because there is no clear direction. All right. So if 4 hour tells me is bullish, 1 hour must say the same. If I'm executing in 30 minutes or the 15 minutes, they must all say the same thing. That is the most easiest way to trade the forex market. Following the trend, following this market structure, following the price action. All right. Now, if you're looking at this from a 4 hour time frame, this is what you're going to be looking at. So if you scale down, by the time you scale down to the 1 hour, it's not going to be like this anymore. So you're going to see higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is what you're going to see. This is what you're going to see. All right. Pardon me. I'm trying to put some drawings. So this is what you're going to see: higher high, lower low, lower high. Then you see another high, a higher low, a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this is how you get your entry. So by the time you confirm that the let me change this color to let me change this to red. So now the red represents 1 hour and the black represents 4 hour. So if you come on your chart and what you are seeing on your chart is this right here, it's telling you that the structure is bullish. So the trend obviously is going to be bullish trend, right? So you have to scale down to the 1 hour time frame, to look at what market is really doing to get a position. So many times I take my position in 1 hour, but most of the time it's usually 30 minutes and 15 minutes. So if you scale down to the 1 hour time frame, this is what you're going to be seeing. So all these immediate moves here are going to look exactly like this. This is what it's going to look like on 1 hour time frame. This is what it's going to look like: higher highs, higher low, higher highs, higher low, higher highs, higher lows. And when there's a pullback, which is the correction on the 4 hour, on the 1 hour time frame, it's going to be this low, higher low, low, lower high, lower low, lower high, lower lows. So you must be able to understand this. Everything has to match. Everything has to match. So let's say you're looking at this on the 1 hour time frame and you want to execute on the 1 hour. So immediately the correction and market is coming back to the upside on the 4 hour, and you've scaled down to the 1 hour time frame. So after this low, market creates a high, a higher low. At the break of this is where you want to enter your trade. As simple as that. All right. So that's how to get your positions. That's really much I can explain about market structure and price action, but I'm still going to do an in-depth video to explain more about market structure and price action. So now let's go to a live chart. All right. So I'm going to take this out. This is a live chart. This is XAUSD right on the chart right now. What can you see? What can you see? You see, this is a high, This is a low. This is a lower high. This is a lower low. This is a lower high. This is a lower low. This came down a little bit. Okay, something like this, and like this, and like this. Then we had this sharp drop, and now we are having a lower high. Logically, what should you be expecting? This is a correction. What should you be expecting? You should be expecting another drop to the downside. So that is what 4 hour is telling us, that the current structure is bearish. So if you go down to 1 hour, now remember what I explained. If you go down to the 1 hour, what are you going to see? You are going to see series of lower lows, lower highs, lower lows, lower highs, lower lows, lower. So exactly what you're seeing on the chart right now. All right. So 1 hour, I don't execute on the 1 hour time frame. So you see that the 1 hour time frame must align with the 4 hour time frame. It must align with the 4 hour time frame, which is the same market structure you are seeing right now. And if you go to the 30 minutes, most of the time I execute my trade here on the 30 minutes. If you look at the 30 minutes also align. What does it tell you? There's a correction. So if you look at the 4 hour time frame, this was this correction right here. After this correction, what are we expecting? Another drop to the downside. Same way, if you go to the 1 hour time frame, what do you see? You see the correction, but the correction is forming this way. All right, forming this way, and now it has gotten back into this zone. What should we be expecting? It should be now is trying to fall back to the downside. So this is a better entry to get. This is where to enter it right now. So what are we expecting? We are expecting this market to fall back to the downside. All right, that's what you're seeing right now. So on the 30 minutes, you go to the 30-minute time frame, everything aligns. So everything must always align all the time. All the time, it must always align at all time. At all time. So that's what you're seeing. You're seeing on the chart right now. So on the 30 minutes, this is the correction. See the correction? That's the correction. But the correction is not as straightforward as it is on the 4 hour time frame. All right, it's not as straightforward. But what can you see? See market push back into that level, now drop back, making a low, a lower low, because this low is lower than this previous low. Now it's correcting back to the up. Another it's creating a high, a higher low, a high, a higher low. Now this is what we are looking out for. This market is either falling back to the downside and creating a low lower than the previous low, or is coming back to the upside. Now it needs to take out this previous high to show that, oh, the structure is changing. It has to take out this previous high. Now if it takes out the previous high, retest that high, retest that level, then create another, then we know that, oh, the market is changing structure. XAUSD is changing structure. All right. However, this also, we have to also see this on the 4 hour time frame. If this is going to happen, we are going to see this on the 4 hour time frame. Now this is the 4 hour time frame. How is it going to happen? Now look at this correction, making moves like this. Now if this market is going to buy again, it's going to make a change in or a shift in market structure, it has to break above this previous high. It has to break above, take out this level, take out this level, or even come to equal highs, retest back this level before hunting back to the upside. Then we know that, oh, there's a change in market structure. Price is no more bearish, it's now bullish. All right. So this is what we'll be looking out for. But for now, we are still bearish on gold. It's very much bearish, and this is a good opportunity to buy gold. So I'll be dropping this as well in the community. So if you want to join the my trading community, the link will be in the description of this video. So just click the Telegram link and I'll see you, and join the link and join the community. All right. So it's a free community, and if you are watching this video I'm not selling you anything, bro. I'm not selling you signals. I'm not selling you courses. I'm not selling you mentorship. Everything I do is free. This is my journey as well. All right. This is my journey as well. I'm documenting everything. So you all learning from me as well. All right. So I'm not selling you anything. Remember that the Forex Lord is giving this out for free. With what I know, it is my choice to give it out for free. All right. So this is what we are looking out for. So you see, on the 30 minutes, on the 4 hour, on the 1 hour, market is still bearish. Why? Because if it was going to be bullish, it would have taken out this high. All right, would have taken out this high. Do some a little bit of correction. Then we know that it's going to, the market structure is changing. But since that did not happen, what happened instead? Right? What happened instead? After the correction happened, you know, uh, pull back into this area. Now it's pulling back again. So if at all this market is going to buy back, it will have to take out this previous high right here. This previous high, it has to take it out. Then we consider it as a change in market structure. But for now, that has not happened. Uh we are still bearish on SAUSD. So the right entry for this market is just what the market is basically doing right now. You enter it, and so if you're going to set your stop loss, I have many people ask me questions about, okay, how do I set my stop loss and how do I set my take profit? So if you're going to set your stop loss has to be above this high. Remember, this is the previous high. So you're going to set your stop loss a little bit above this high. Now, what does that mean? That means that in an event where market takes out this high, it means that market is changing structure. Hope that is clear. If you are setting your stop loss must be above the previous high. Why must it be above the previous high? Let me write this out. Number one, if you do not set your stop loss above the previous high and you put your stop loss somewhere here, market might just want to, come back and retest that high. So market might want to retest the previous high. So that's number one. Market might want to retest the previous high. Number two, change in market structure. Change in market structure. All right. So these are two things that could happen. So number one reason why you must set your stop loss above the previous high is because market in a bearish trend, right? What we have right now, market can come back, retest this previous high, create double top, retest this high, and then before the crash happens. All right. So that is why you must always set your stop loss above the previous high, because if you just set your stop loss inside, you know inside here, market can just come, take you out, retest the previous high, and then continue. So you want to play safe all the time. So that's why many of the time I have wider stop loss. I have wider stop loss because I want to play safe. All right. So play safe means that my stop loss must always be above the previous high, just in case market wants to retest that high before the move happens. All right. So that is what you have to always note at every point in time. So in a case where market comes to this high and takes out this high, what does that tells you? That is going to tell you that, oh, market is changing structure. Market is changing structure, and the structure has changed from bearish to bullish. Why? Because if you want to consider it, you are going to consider it from this level. After this dump right here, market made a correction into the key level. After that, what happened? It created a low. then created a high, created a lower low, a higher low rather. Why is it a higher low? Because this low is higher than this previous low. Now after that, created equal top and created another higher low. You see that this low is higher than this low, and this low is higher than this low, this low is higher than this low. So if market is creating a high, a higher high, a high higher than this high, now it's creating a higher low, a low higher than these previous lows. Now market, what could happen is market might change structure. All right, changing structure means it has to take out this previous high. Then you know that there's a shift or there's a change in market structure. But if this do not happen, then we are still bearish. Market is just like going to fall. So your stop loss is going to be above. If you are selling, your stop loss is going to be above the previous high, right? Above the previous high, and your take profit is just going to be at the previous low. All right, your stop loss above the previous high, and your take profit at the low, at the previous low, at where you had the last low. So you're going to have your stop loss just right here. All right, at the previous low. This is where you're going to have your stop loss. All right, so that is that for market structure. This is just the basics. Don't forget, this is just the basics of it. We're still going to dive into it properly, but when the time comes, we're going to do that. For now, this is just the basics of market structure and everything you should know about market structure. All right, this is just the basics of market structure and everything you need to know about market structure. All right, this is just the basics. So you want to screenshot this, you can screenshot this, and I'll see you in the next video. Bye for now. Before, make sure you subscribe. The only thing I want from you is make sure you subscribe to the channel, like this video, share the video, leave your thoughts in the comment section, and I'll try my best. If you have questions as well, leave it in the comment section. I'll do my best to answer all your questions. And that being said, catch you some other time. Bye for now.